Hello there, this is James of Bursat. Thank you very much for joining me today. Well, where should we start? Okay, US elections. What an election we've just had. Let's face it, let's look back at the build-up. In the red corner, we had Hillary Clinton, considered by some as generous, respectful, caring, willing, capable, resilient, tough, determined, versus Donald Trump, which some considered had dementia, inflexible, moody, impulsive, danger, red alert everybody. Yes, many general consensus was Trump was a no-hoper, and this indeed was all going to go to Hillary, and she was going to be our next president of the United States. And then
We're going to make this decision now. The Fox News decision desk has called Pennsylvania for Donald Trump. This means that Donald Trump will be the 45th president of the United States, winning the most unreal, surreal election we have ever seen. This candidacy starting on an escalator ride 1 year ago and going down against 16 Republican candidates. What started off as unlikely, impossible, is now reality.
I know. What a complete surprise. Everybody was absolutely shocked. No one even thought or even comprehended for 1 second that Trump could possibly win the presidency. But what's even more surprising was actually the reaction of the actual market itself. In the build-up of the election, many analysts were actually saying that on the likelihood of Donald Trump winning the presidency, they expected the market to actually start to plummet. And when the initial results actually started to come in, this indeed actually happened. You saw the Nikkei in the Asian session actually crashed. Dollar crashed against the dollar yen, coming up to 101, which actually clearly scared the living bejesus out of Bank of Japan. Gold, obviously the safe haven, skyrocketed to 1334. But many analysts, any analyst worth his weight in gold will tell you this is not a surprise event, because usually when you have a shock event occurring, you often see the market reacts this way. Similar in many ways, if you think about it, to the brick exit. But unlike the brick exit, which indeed actually in fact had a follow through, we didn't see that. Shortly after, obviously, the market started to collapse, the market then soon rebounded. And then, in fact, we actually saw a very heavy, big, bullish run for the USD. So, the subject of this video today is we're going to talk about why we're seeing dollar strength on the back of Trump's election win. So, what really is driving the USD higher? Why has Trump made all the difference? A lot of people are actually putting it down to the fact of some of the comments and statements he's made, the build-up of the election, of how he's going to handle the US economy and some of the actions he's likely to do. Let's run through some of these actions. One of the main driving factors is bear in mind that now the grand old party is back in full power. Obviously, the Republicans are back in the White House and they practically control the Senate, which means any fiscal act or policy they push forward will most likely go through without hindrance. Another factor is the fact that Trump has said he intends to lower US corporation tax, which is one of the highest in the world as it currently stands. This should encourage growth, spending, and increase inflation. Plus, he has spoken about ending the North American trade agreement. Trump is certainly not a big fan. And, of course, there is tariffs on imports from rivals such as China and Mexico, which he intends to put in place. However, I don't think, though these are actually key areas behind the dollar strength, I actually think it's because there's another battle on the cards. The other battle we're about to see is, of course, the Trumpster, Donald Trump, go up against the Federal Reserve. And of course, we all know how Donald Trump respects women. So he's about to actually clash horns again with a very successful, high-profile, very intelligent lady, which is, of course, Janet Yellen. Trump hasn't held back on his views or his comments that the Fed's behaviour in raising interest rates has been very, very poor. In fact, he hasn't liked one bit whatsoever their bit-by-bit rate increases. So they're actually in the impression that with him in power, with him as president, he's going to put a lot more pressure on the Fed. Now, come the 20th of January, of course, he cannot fire Janet Yellen, but he can indeed put her under a lot of pressure and maybe even force her to resign. So really what we're seeing with the dollar strength is actually the fact the market is actually expecting, with Donald in the power, in the White House, we're going to see very aggressive rate hikes next year. See them a lot more aggressive, a lot bigger, a lot more frequent, a lot quicker. So this is the reason why we're seeing a lot of dollar strength currently at the moment. So let's have a look at the market as it currently stands, starting with the old favorite, of course, the US dollar versus the Japanese yen. Now, as I mentioned earlier on, obviously on the back initial announcement of Trump, the yen gained an awful lot of strength against the USD. As you can see here, this was the actual, I should make it red so you can see it. Here is the actual event. It went down all the way to 101.70, well, way below 101.753, which is like a minor support as it currently stands. This clearly scared the bejesus out of the Bank of Japan. Last thing they need is a strong Japanese yen. But like we say, that all changed in a very short space of time. As it's standing at the moment, you see a lot of dollar strength. The dollar is indeed trading against the yen above the simple moving average, showing a key potential support of 103.331. The first support, according to the Bollinger Band, though, is at 104.906. Currently, as we are speaking, it's trading around 108.93. So there is a big psychological level. Big key resistance really is at 104. So let's see how that plays out. Moving on to obviously the second biggest reserve currency, which is the euro. So it's the euro dollar. Here we go again. As you can see, back at the time before when the election announcement was first sort of announced, the euro indeed skyrocketed against the dollar. It soon corrected itself, and now we're full swing in our bull run. It's currently under the simple moving average, which is showing a key resistance at 101.79. Remember, many analysts tend to say that if it's under the simple moving average, is actually sort of indicating a bearish trend. As we can then move on, we can actually see, according to the Bollinger, it's testing a key support really round about 107, so 1.07273. So indeed, obviously, the euro is under a lot of pressure against the good old greenback. And finally, moving on to a currency which I think should have a lot of attention in the next coming months. And I'll tell you why, and that is, of course, the USD against the Canadian dollar, the loonie, so to speak. Now, as I mentioned earlier on, Trump is considering and banding the North American trade pact, or whatever you call trade act, so to speak, which could potentially really damage the Canadian dollar. This is why we're seeing, obviously, the USD against the CAD performing quite well. We're looking at some of the levels here. The first major resistance, according to the Bolly, is at 1.35715. First support and pivot, again, according to the Bolly, is at 1.33839. So really, it's the headlines on the North American trade agreement. What's going to happen to that after the 20th of January, after Trump gets into that big old White House? That's a lot of things we've got to be paying attention and keeping a very close eye on indeed. And always, as I always say, this video is for informative purposes only. I do suggest you do your own research and due diligence before entering any trade. I'm James from Bursat. Thanks for watching. Till next time, you trade safe.